Hi traders, Nick Shaheen here, recapping the week ending September 19th. We came into the day knowing the news, the results of the Scotland vote. They voted no to severing from the UK, and that was very good news for the markets. Europe was up. I think Japan made a new high. And Germany in particular, I like watching that ahead of the US Open because we just tend to emulate it recently. So they were up, Germany. The DAX was up 0.7% at one point, I think, and then mid-morning we fizzled, before the open, I should say, we fizzled down to about 0.3, almost flat at one point. France went red. UK didn't go red, obviously. They were the one with the best news there. And the US futures looked super strong. I mean, we were up in the stratosphere for a while. The open happened, and then we quickly gave it all up. And matter of fact, the middle of the day, it looked pretty ugly, and we almost lost the 2000 level in the SPX. Let's look at it in pictures. Up here is the S&P representation with the E-mini ES, and this is the SPX. So let's look at the SPX. It's a little more recognizable to a lot of people level-wise. So we almost touched 220 at the exuberance at the open, and then we looked like we were going to lose 2000 somewhere in the middle of the day. We settled around 2010, which is pretty darn good level, but still not as good as 2020 and threatening. So, the bulls had the chance. The bears won out the day, in my opinion. No one was paying attention to the small caps. You got it. I always bring up the small caps. So the small caps were down almost 1%, and the broader indices, the S&P and the Nasdaq, were still trying to hang on to greens and flats. So one should pay attention to the small caps. So this is what happened to today. The Nasdaq, same deal. How come we lost it? It's because like I said on Thursday, my review of the markets were that a lot of the strength, the super strength, came from the momentum stocks. And this year, if we've learned anything, is that the momentum stocks are not holding their strength more than one day, maybe two at the best. So I said, the Nasdaq outperformed on Thursday, but it was all built on momentum stocks being up double digits. So my question was coming into Friday, will they be able to repeat? If not, who's going to step up? And they weren't able to repeat. So we can zoom out and look at the levels. We can zoom out to, say, 15 minutes to look at the week. I'm going to zoom out to the 15 minutes to look at the week. Nasdaq as well. And lastly, the smallies. All right, so what happened? Middle of the day, middle of the morning, I looked at the S&P and I said, well, it's threatening to break a rising wedge. This is the red right here. And if we do, it's going to tumble, and it did, and we broke trend. Here it is in the SPX. And as far as the Nasdaq, you can see the similar pattern also broke right there, middle of the morning. Apple, it was its own little Idaho, and Google showed a lot of strength in the morning on Friday, and then it suddenly broke down. I was pretty happy with it but overall it had very good performance for the week. Apple had a lot of potential, but didn't deliver on anything too surprising. Monday might be a little different, and it might levitate the markets because they're going to come out with sales, and apparently the lines are to the moon and back. So that's the overall picture. When we zoom out on the week, you can see the trends are threatening the breakouts but fizzling, threatening the breakouts but fizzling. And last week I mentioned the level that I like in the small caps that keeps coming back into play from mid-August, right there, 1150-ish. This is again the mini TF instead of the RUT. On Friday we definitely lost that level. We butted up against it this week as resistance and then broke it, but then reverted to it and then broke down from it. So we're still, level-wise, we're still not committed to breakout or breakdown, but we are at levels of breakout and breakdown. So what to expect for next week? Next week is going to be lighter as far as scheduled headlines. We do have GDP later in the week, so I expect that we're going to come into Monday with some sort of downside pressure just because how the day ended on Friday. Now, we may get surprised and levitate, like I said, from the Apple news, but then again, will it be a relief pop? Speaking of relief pop on Friday, you've heard me say it. I'm selling pops because they're all of the relief nature. Couldn't have been more perfect on Friday as far as an example. We popped based on the fact that something bad didn't happen. The bad thing was the Scotland, bad in regards to its repercussions throughout the world. Nobody wants to create uncertainty. So the uncertainty cause did not occur, therefore we popped on a relief. And those are the pops that I short. Whenever I don't short, when do I not short the pops is when I know that fundamentally we are running based on something. Like I would not short Apple on Monday if it's running based on the fact that its sales are better. But I will short the markets because that's only for Apple. So that's what I mean by relief pops. Know what you're shorting, know what you're chasing. Chasing is not paid this year because of the relief pop nature of all of those, most of the pops, and the fact that a lot of the pops are happening because of frothy names like the momentum stocks that can't hold their greens. So that's what I mean. Don't chase relief pops. So what do you do next week? Chances are we're going to meander. If we're going to pop, we're going to sell it. If and there's no doom, then we're going to stay about where we are. So what works? Again, I do credit spreads and I like iron condors. Buying premium is not going to be a winning strategy until we start seeing a little more gyration in the markets and commitment one way or another. So lazy bears are not pushing the downside, and the bulls are trying, but they're not getting traction that sticks for a long time. So meandering is perfect, and for that I do iron condors. So I find good ranges, and I do find good ranges. Without ranges, don't just place them willy-nilly. You got to find ranges, and it's not every ticker that you can do that on. And you sell spreads, risk and spreads outside of those ranges, and you wait for time to tick by and you buy them back cheaper. I did a lot of that this week. If you follow me, you know everything about those. I did mention last week that I'm picking on a few extended names, like and mostly momentums, like Tesla and like CMG and like Netflix. And I did say I was going to try to catch Priceline on the long side. I didn't, but I have friends that did, and all of those worked out. And I think I'm going to rinse and repeat for this week. I see potential in all of those. How do I short things? You can do credit call spreads, or easier, you can do some debit put spreads that are lotto style. Or you can do both if you're really aggressive on the short. So this has been a quick recap on how to play next week, and where were we this week, and what is driving the price action. I really don't care where we're going to be months from now. I just want to try to profit from the current price action. This is Nick Shaheen, and thank you very much for your time, and I'll see you next week.